Hi guys, I'm Phil Town from Rule 1 Investing. Today I want to talk to you about Biden's first 100 days in office and what they mean for us as investors. So back at the start of President Biden's term in January, I made some predictions on how his 100-day plan would impact investors. But now we're past that 100-day mark, and I want to give a little recap as to what's happened and how we could be impacted as investors going forward from here. So let's roll that clip. Well, let me first tell you that if you've been doing any reading at all, then you probably have as good an insight into what's gone on in the first 100 days of Biden's administration as I do. What we have seen, obviously, and strangely, really, is a continuation of Trump policies in China with regard to the Federal Reserve, pushing the Federal Reserve to do more. That was Trump 101. The continual printing of money by the federal government. Trump did $6 trillion in 2020 and printed 35% of the money ever printed in the history of the country. And Biden is on track for another $6 trillion. The Federal Reserve Bank is printing $120 to $180 billion per month in new cash, which didn't exist before. They just make an entry on the books and then they go buy treasury notes with it, and that's how the government's paying its bills.
Energy production issues.
Energy. Okay, so there's a big divide right there. That is a big swing away from Trump's policies. Of course, were, to be energy independent was a higher priority than, let's say, climate change. And the Biden administration has reversed that and has immediately gone to a policy of shutting down the Keystone Pipeline project, gone, and they're now helping litigate other pipeline projects and shut down drilling.
Global ones.
Yeah. And shut down drilling in reserve areas, and has opened up, interestingly, just recently, the possibility of California becoming energy independent by just planting wind machines all down the coast of California. So they're doing the environmental study on the first wave of these machines to come into, if you live anywhere near San Luis Obispo, Morro Rock, Morro Bay, up through Big Sur, presumably up the Mendocino coast. All of those areas are up for potential grabs for wind machines going in off coast. So I don't know how far away from the coast they'll get, but it's an interesting process. And then, of course, Biden is, his first 100 days is just reversing a great number of the really contentious things that Trump did, took us out of the Paris Accords. Biden's putting us back, putting up a wall along the Mexican border. Biden stopped it immediately, tore down any part of it that wasn't already finished. And of course, we immediately, and then these policies of like, yes, come and we'll help save you from your own country, have resulted in a wave of people hitting the border, and they're trying to reverse all that. They ended up with a fairly substantial crisis on the border. So
here's some interesting questions about capital gains too.
Okay, hold on a second. So hang on. I'm trying to just take the short view here of these 100 days.
Okay.
A reversal of, let's say, significant Trump policies with regard to environment, climate change, and border. A continuation of Trump policies with regard to China, Taiwan, monetary policy, fiscal policy, the things that are creating trillions of dollars. Those are all the same. Reversal of policy with Iran, and a reversal of policy with regard to NATO. And I got to say, a continuation of the policy of Trump to get us out of Afghanistan and these land wars in Asia. So go Joe there for real. And it looks like they've now shortened up the time frame to July or August to get everybody out of there, which is very, very cool. So, depends on where you stand on all these things, but that's the Biden administration. Of course, they have zero cooperation from the Republicans as a quid pro quo. And I'm sure the Republicans are looking for a reason to impeach somebody. So it's going to be contentious out there. And now I think with that, let's talk about what the big impact of this is. So we can't say it's Biden's first 100 days. What we can say is the continuation of these policies, economic policies, with regard to monetary policy, which is the Federal Reserve printing money or raising interest rates, and fiscal policy, which is Congress with deficit spending and the policy of handing out $6 trillion. Those two combinations are driving inflation. So let's dive into that, okay?
Okay.
So what we're seeing is the US government basically lying through its teeth. Hate to say it so bluntly, but time is short, so we'll just get to it. They're just lying to us about the actual inflation rates. And the funny thing is we all kind of know it. They're lying because they have removed from the inflation calculation the three probably biggest things people spend money on, which is energy, housing, and food. We would throw a fourth one in that affects all of us who are trying to raise kids to get an education, and that is the cost of a college education. Those four things are accelerating in their cost to the average consumer. Last year, nationwide, housing went up a little bit over 10% across the entire spectrum of housing. And in some places, like we intimately know up in Bozeman, Montana, where one of our kids just was buying a house, they've gone up 50% in the last 18 months. And so
Phoenix,
Arizona off the chart. I mean, even in Atlanta, which is one of the slower growing areas anywhere, you're starting to see all this pressure. People have people waiting in line to buy their house. I mean, it's just really incredible. And what's even more incredible is the federal government doesn't include that in its calculation of inflation. If you didn't know that, that's a sobering thing to discover. Food has gone up at double the inflation rate now, but they don't include that either, and often have an offset for some of the things they do include, like let's say computer. If you can now go buy a Macintosh for $2,500, but it's twice as fast clock speed as the old PC, and you can buy that PC now for $300, there's been a deflation in the cost of computers. So it's just, right, okay? So they play in this game, and the reason they're playing the game is because Social Security is indexed to inflation. So are many government employees, retirement plans, all through the country. And so if you have the government agreeing that inflation is where it might be right now, which is pushing perhaps as much as 8%, per year, if we include energy in this and we include housing and food, then that would just explode the government payments that are going out there. And that would further inflation, which would further explode it. And you get into the potential for hyperinflation and a really bad cycle. And the reason it becomes a really bad cycle is because the Federal Reserve will find it necessary, if we get into hyperinflation, to raise interest rates aggressively. And when they do that, the stock market will crash like you have never seen it in your lifetime. Because right now, the stock market is priced as if there is never going to be a change in interest rates, and they will always stay at a basis point of 0 to 0.25 basis points. And that mortgage rates will always be at 3%. And it's unbelievable what's happened to the price of the stock market now, has gone to approximately a yield of 2%, which means, by that it means that the stock market is now priced as if it's a government bond. It's priced at roughly the same rate of return, earnings to the cost of the companies, as a 10-year Treasury note. And that is time to take a deep breath, because there is no way that something as unreliable as stock market prices over a relatively decent period of time, let's say a year or 2 years or 3 years, it could be anywhere, can be felt to be as responsible for, let's say, a retirement account, someone running a pension fund for the California teachers or the police. They can't possibly be looking seriously at the stock market as a storehouse of their clients' value for their retirement. And yet they are. And when this bubble finally pops, and by the way, we're very near the end of this, when it gets unsustainable, and it's getting there, then this thing will pop, and all of these pension funds, all of these insurance funds, all of these retirement funds are going to suddenly discover they don't have the resources to produce the cash flow that they need to produce. They don't have the yields, and the result is going to be a train wreck out there. So this is a really, really interesting time right now, I think, in so many ways. All right, now I'd love to hear from you guys. What are your thoughts on Biden's first 100 days in office, and how do you think that you might be affected as an investor going down the road here? So leave a comment below with your answer, and I'll be sure to follow up with you. And thanks for watching. Now go play. So if you enjoyed this video and you feel it was valuable in teaching you more about Biden's first 100 days in office, hit the like button, you guys, and please share this video with your friends. And if you want more investing content, just subscribe to my channel. And don't forget to click the button on the screen for a free gift. And thanks again for watching.